NVIDIA may guarantee $250 billion to fund OpenAI's biggest data center ever, and Michael Burry says the whole loop is spinning, plus 4 more stories moving the tape. Let's get into it. Start with the number making Wall Street uneasy, $250 billion. The Wall Street Journal reports NVIDIA is in talks to guarantee roughly that much in financing to help OpenAI lease a 10-gigawatt data center campus SoftBank is building in southern Ohio, with separate discussions on up to $350 billion more in chip financing. Total project cost could top $500 billion, the largest ever announced first 800-megawatt phase targeted for 2028. Why it matters? It deepens the loop where NVIDIA effectively funds its own customers, who then buy NVIDIA chips. And the bear case is now mainstream. Michael Burry calls it around and around we go, flagging circular financing as systemic risk to the entire AI trade. The forward signal: this is precisely the spending big tech's earnings this week must prove is paying off. If they can't, the loop looks fragile. That test arrives in 48 hours. Microsoft and Meta report Wednesday after the close. Apple and Amazon Thursday, with the Fed's rate decision sandwiched Wednesday in between. The single most watched number in tech, Microsoft's AZURE growth, guided to 39 to 40% constant currency, with investors treating 36 as the bogey. Fiscal Q4 EPS consensus sits near $4.21. Why it matters. This lands into a market, in Fortune's words, in revolt over AI spending. After Alphabet's CapEx shock, the read-through is binary. Cloud growth must justify the spend, or the entire Mag 7 multiple is at risk. The bear case: even a small Azure miss confirms the fear that CapEx is outrunning revenue. The forward signal: if Azure prints above 38%, expect the AI CapEx trade, including that NVIDIA OpenAI loop, to firm. Below 36, the skeptics take the wheel, setting the stage for all of it, a relief rally. Stock futures jumped Monday as a weekend pause in U.S.-Iran fighting sent Brent crude tumbling over 7%, back below $90, unwinding 2 weeks of war premium risk-off. NASDAQ 100 futures rose 1.6%. The S&P 0.9, the Dow a full point. Why it matters. Oil's drop is the single biggest driver of the risk-on rotation. But it's a bounce into a loaded calendar, 4 of the world's most valuable companies, and a Fed decision, all this week. The bear case: the backdrop is fragile. Alphabet's negative Q2 free cash flow and $205 billion CapEx guide, revealed last Thursday, broke the deal between investors and AI spenders. The forward signal: this bounce only holds if this week's reports re-earn that trust. One soft cloud number, and the war premium relief evaporates fast. Now to the frontier, where China just raised the stakes. Moonshot AI published the full open weights for KIMI K3, a 2.8 trillion parameter model, the largest open-weight AI system ever built, now free to download on Hugging Face, a day ahead of schedule. It earlier benchmarked number 1 on front-end code arena, ahead of Claude Fable 5, and now anyone can self-host it. Why it matters. It's fresh proof China keeps closing the frontier gap around US compute limits, and it pressures closed model API pricing. The bear case, and it's a big one: even at 4-bit compression, the model weighs 1.4 terabytes, requiring multi-accelerator server nodes. This runs on Blackwell-class hardware, not a laptop, so NVIDIA still wins the compute either way. The forward signal: watch whether Moonshot's license permits commercial use. Unconfirmed today. If it does, closed model pricing gets real competition. That open versus closed divide just got a signature line. Jensen Huang's open weights advocacy letter roughly doubled to about 50 signatories. NVIDIA, Microsoft, Meta, and 20+ others framing open models as strategic U.S. infrastructure. But the real story is who refused to sign: Anthropic, OpenAI, and Amazon. Why it matters: it's a clean split between the open weight camp and the frontier labs whose entire moat is closed models, and it sharpened the very same week KIMI K3's open weights landed. The bear case for the holdouts: if open models keep matching closed ones, as KIMI suggests, defending a closed moat gets harder to justify to Washington and to customers. The forward signal: watch Anthropic's stance heading into its October IPO. A lab selling safety and closed control has to explain why open infrastructure isn't the future. This is how the industry lobbies for the next decade. The through line today: one enormous bet on AI infrastructure and a market that suddenly wants proof. NVIDIA's financing loop, this week's earnings, and China's open weights all pose the same question: is the spending real or reflexive? We'll have the answer by Thursday. Subscribe to the Daily Alpha, and we'll see you tomorrow.